Hi, guys. Before we kick off our episode, I would like to say a quick and heartfelt thank you to Underfoods and its CEO, Asif. Asif, thank you very much. You continue to give us great service. The food is fantastic. Asanteni sana.
Hii jikoni ingekuwa ni ngoma, hiyo ngoma ingekuwa ina sound aje?
Hi, everyone. This is Ali Hussein Kasim of Alitalkstech. Today, I have a good and old friend of mine who's been peppering me to do this podcast for some time. But today, I have finally cornered her. Rose Muturi. Rose, karibu sana dada.
Asante sana.
So Rose is the managing director of Branch International. But Rose, let's start by who you are, your stories, and let's flow from there. As you know, Alitalkstech is about telling our Pan-African tech stories. And our tech stories are not tech stories without the people who are actually making these stories.
Yeah.
So, Rose, over to you.
I feel like it's an interview.
No, it's free flow of who you are, where we are at now, and we'll take it from there.
All right. How far back do you want me to go?
As far as you want to go.
Since when I was born. It's going to be a long time ago. Yeah.
I mean, you can just give us a quick brief, but the main core interest is when you actually started in the, in the tech ecosystem.
I see.
Yeah.
Well, let's see. So school background, I did statistics. I really love numbers. So anything to do with numbers, I get very excited. And from there,
now you see, that is a part of you I didn't know after knowing you for all these years.
Yeah.
Imagine that.
Even the books I read are more like there's a number somewhere, like you need to look at maybe a research was done, this was the outcome. And so I find it very fascinating.
Okay.
So that was back in the day when I was in uni. I was in Jomo Kenyatta.
JKUAT.
Yeah. So from there, those are the days when newspapers would advertise for jobs. So, but they wouldn't say where, like which company. They would just say are leading this or the other. But actually before that...
It's amazing how far we've come.
Yeah. There was a lot of trust.
Yes.
Like you would actually trust that this is an ad, let me apply. You don't need to know anyone.
Yes.
Before that, actually, I was working in a BPO. That was my very, very, very first job.
That's the business process or outsourcing.
Outsourcing, yes.
Which one was this, if you don't mind my asking?
I don't remember the name. Either Skynet or something. It was among the very first ones. And we were the pioneers. And we were working nights, and we had to call folks in the US, folks in the UK.
So you're an outbound customer service or inbound?
Not customer service, outbound.
Sales.
User research.
Okay.
So we're given contracts by different countries or companies, so to say, and they want us to call their intended target segment, ask them a bunch of questions, and then they know how to craft a product. So it was more of tech-related questions. So you are supposed to call like a CTO in a company and ask them about the printers that they use, because those days printers were very important.
That's interesting.
And it was a 40-minute call. And you cannot skip any question. And you're asking someone who's very busy.
And you don't know them.
You don't know them.
Cold calls.
Cold calls. And so I was really bad at it because... Number one, we have accents. So you're calling folks and they're like, where are you calling from? You're like, I'm calling from Kenya. And then now they digress. They start asking you, how are the Masai Mara? Is Carnival still open? And so on.
Do you still live with animals?
Yeah, some would ask such questions. And you try to bring them back to the questions and they tell you, oh, I'm sorry, I don't have 40 minutes for this. Then they hang up.
Wow.
And you're being measured. So anytime they would do the lead board, like how are we performing? I used to be actually among the last because I think I used to understand when they say they're busy. Well, the others would be like, even if they say they're busy, let me just try and sneak in another question and another question. So in the end, the other thing as well was we were doing night shift. So
night shifts is from what time to what time?
7 p.m. to 9 a.m.
So when the other markets are waking up,
Yeah.
For us it's in the night.
Yeah. So then during the day, I go back home. So that's the time I'm supposed to rest and sleep and so on. But my mom used to have a shop. So she was like, hey, you're back home. Excellent. So you sleep for 2 hours. She says, please come. Let's help me at the shop and so on. So I think I was like maybe 40 or 42 kilos. Then I lost so much weight because I wasn't eating.
How many years ago was this?
This was in 2005. Yeah, a long time ago. And then eventually I was like, I can't do night shift. It's just not for me.
Yeah.
Because I feel like I'm losing a lot. And then you're young, you're impressionable. You're like, everyone else is out at night. I'm supposed to be working. So I stopped. Luckily, actually, within that time is when I had applied for that. It used to be called preferred personnel. They had done an ad in the paper.
Yes.
And I applied. And then now we were called to do like some tests. And then eventually that's when we got to know that was Standard Chartered that was hiring. So I think I'm very blessed because I've not been out of a job because it happened back to back. I resigned like today. And then the same night, I get a call from HR.
You resigned without a job?
Yeah.
Without having a job?
Without having a plan B. And then HR from Standard Chartered
You must have had enough, huh?
Oh, yeah. That was like, this is it. Like, I don't care about printers. I don't care anymore what printers people use. So when they called me, I think it was like 7:30 in the night, I thought it was fake. Like, why would an HR in a corporate, you know, the way you look at corporates when you're not in a corporate is very different. And I said, I thought people work until 5. This person is calling me at 7 and they're telling me to show up tomorrow.
This is a hoax.
It could be. So I told my mom, I'm being told to show up tomorrow. And she said, well, because it's city center, it was Stanbank House, just go. It's like in city center. You're not being told to go somewhere dodgy. You've been told Stanbank House and so on. So it was fine. So we were many. We're like, oh, wow. So this was true. And we were the last batch to ever be hired, like for permanent, let me call it permanent roles at that particular time. That was the last time.
We used to call it permanent and pensionable.
Yes. However, my story was different. I promise you. So because we're queuing outside, I learned a very important lesson. And since then, I never...
You were queuing outside?
At Stanbank, because we were many, so that they could, see how will they organize everything, how will people come in and so on. So...
No. Please, just step back 1 minute for me here. You are like how many?
Probably, I'm going to guess maybe like 200 or something. We were
200.
many. We were many, yeah. Because they needed to do, that's the time we were doing like a huge KYC project in the country.
I see.
Central Bank had said all banks need to make sure that
need
KYC,
to update their data and stuff.
Okay, and it was all paper-based.
Okay.
So the banks were hiring people to come and go through their files.
I see. So it wasn't. It wasn't. It was for a given time.
Now that's where the story gets interesting.
Uh-huh.
Because many as we were, I was standing at the back. Of course, I'm talking to the people I know. Maybe we went to school together and so on and so forth. I promise you that person, I don't remember their face, but I remember they just did this. You guys move to this side. You guys move to this side. So you don't know what's going on. You're thinking probably they're organizing so that we can start now going in and so on. And then on this side, we were told you're going to deal with the KYC project. On this side, now they went on to join the bank as tellers, as they used to call it, personal financial.
What criteria did they use?
The hand, like this.
What?
Yeah, because all of us had qualified anyway. We had the same merit and so on. Now, that's not the worst, because once we got in, we were thinking, we're all going to be doing similar. It's just that you've been taken to the front, and you used to find like a teller job so prestigious. You're going to be dealing with money and so on. But I never wanted the teller one. I wanted it used to be called PFC, Personal Financial Consultant.
Yes.
because I felt it's very posh. You're the one telling people how to open an account, what account should you open. That's the one I wanted. And you sit at the front. So that's the one I really wanted. But I got the KYC one, which meant back office, you're dealing with files. However, for us on KYC, we were told we'll go on 3-month contracts. These others were now put on permanent 6-month probation, but you're permanent already.
And the decision for that was, Simama Pandehi?
Yeah.
Simama Pandehi?
Yeah.
You can't be serious.
I promise you, since then, I never sit at the back. Because I was like, if you're at the front, good things happen to people at the front. Always, never sit at the back. Yeah, that was life-changing for me. Wow. Yeah.
Okay.
So, but eventually...
So you got into the bank.
Yeah.
Dealing with KYC paper issues. How far we have come?
How far? I'm telling you. Oh, my goodness. But, that time you're so young and impressionable. You're excited you have a job, which was fantastic. We used to work long hours. So we used to get dinner served. We used to be given, we're taken home by taxi because you've worked long. It was a really intense and short time project. So we would leave at 8. And the policy then was if you're leaving at that time, you need to be given a taxi home.
For safety and stuff.
And then there was overtime. And I was like, oh my gosh, this is so much money. We are getting so much money, at least in that time.
I think that time overtime is gone. Eh?
Yes. So you don't think about you're working for long hours.
Yes.
You're just excited. You're like, wow, well, this is cool.
So take me through very briefly what you were doing. KYC is something that is super interesting today. We have forgotten how far we've come.
Yeah.
All the paper-based stuff that unfortunately some banks are still asking you for paper.
Yeah.
2025.
Yeah.
And you were dealing with it how many years ago?
That was 2005.
2005.
Yeah.
So basically 20 years ago.
Yeah, 20 years ago.
Some banks still haven't changed that process.
Yeah.
Wow. Okay, so 3 months doing KYC.
Yeah.
Tell me.
So the thing was you're given files and files of account opening documentation. So you have to check all these documents. Do they have everything that was required? Do they have a photo? There used to be a card for the signature. Do they have, whether it was a business, the business registration, everything?
Okay.
And then you have to document it. So
this is both personal and business.
And business and corporate, everything. And I was based out of industrial area branch. So what I would do is I found it easier to key in the information in a computer as opposed to writing it down. And then I would tell everyone, give me your information.
But you had a computer
well.
at least.
At least we had one where we were supposed to, in the back office, so long
you had one. It wasn't like a computer for everybody.
Not for everyone because...
It was a communal computer.
Yeah. So once you're done, because people would write it down and then it's fed into the computer. So I volunteered. I'm like, I'll key this information in. And then now, because I love data, what I would do is graphs of this is the completion rate, what percent in SME, what percent in personal.
Oh, wow.
Just
that
out
was
of
personal initiative and the love of data.
Because if I tell you it's 20, what is 20? But if I tell you it's 20 out of 100, then you see it's 20% and you can be able to make a decision. But then I told myself a graph makes it easier and faster for you to see and make a decision. So I would send that to the operations manager who would forward it to the head office. And then suddenly now the head office was like, whoever this is,
we want her.
Yeah, she needs to come. I have never worked in a branch front office until maybe much, much, much later in life. I never got a chance to be a PFC.
So that personal initiative of saying, let me do this, let me key in this, and then say, I love statistics.
Yeah.
So let me start. So where did that take you?
It took me to the operations office in the head office. So
From Inda.
From Inda. At least now I didn't have to use those matrices where you can see the ground. Those matrices are really unroadworthy, I promise you, those things. So
You used to see the ground.
yeah, you could see the ground, but now you're where you are, you have to use it because there's no other. And those things never used to go to major
Yes.
roads because they're unroadworthy.
Yes.
So getting to city center now, that's where the head office was a very different world because here you're mingling and interacting with the powers that be. We're talking about the regional heads, the directors, and so on. You use
So
the
what were
same
you doing
elevator.
at head office?
So now all the information would be keyed in by the various branches in Excel. Then they would send to me. Now I create the charts now showing each branch how they're doing, and then also like countrywide, how are we looking? What is the completion rate and so on? So those are the charts that now would be used in the whatever meetings they would go for, executive meetings. Do we need to hire more people? Do we need to move faster? Do we need to now say we're okay? Which would then be forwarded to central bank that this is our completion rate and so on. Yeah.
Data at work. And that started with you in Inda.
Yeah. Really, that was really cool. I didn't know I was doing important work. I didn't know. I was just trying to save time. Like, we're going to be asked these things tomorrow. We'd rather put them in a chat.
The power of serendipity.
I suppose, really. Yeah.
So,
yeah.
Okay, so after that.
So I was in head office for quite a bit of time. So I did quite many roles. But one that was very interesting is while I was doing the whole data thing and KYC, there was a job that was advertised. It was internally, business analytics. And the way the bands were, you start from 10 all the way to 1. So band 10 is entry level. Then when
entry
you get
level
to
manager or entry level?
Just entry level. Yeah.
Just
9
employee.
is when you start being a manager.
Okay.
So I was still at a 10. And then the job that was advertised was a band 7, which meant mid-management. And one thing I've learned in life is someone actually told me this, people will always try to cut the tallest grass. So when I wanted to apply, everyone was telling me, but this is a band 7.
Don't do it.
It's never happened in history where you can move from 10 to a
7.
There's a process to this. There's people who've been in the bank longer, the people who know the process and the products and so on, which was very, very true.
The so-called seniority.
Yes, like you have to follow a path. A carved path. But I told myself, what's the worst that can happen?
They'll say no.
They'll say no. It's not going to kill me. It's a 50% chance. You see the way statistics help.
You will still be in that job that you are in if you miss out on the band 7.
And it's a 50% chance. But if you don't apply, it's a 100% chance.
You must
0.
put your best foot forward.
And I applied. And we were a few people who were called in. We did some, it was an assessment where you have to do some data on a comp. You're given different sets of data. You're told analyze, give out your output and so on.
Practical work.
Practical, very practical. And it took I think an hour and a half. And then I actually got the job.
Got the job.
And they were like, we have not experienced this. So we have to actually speak with HR to see how we can accelerate you to 7 because you can't jump from 10 to 7.
Why?
So we going to 9 and 8 and 7 was done within a year. So immediately moved to 9 and then in another 6 months moved to 8 and then another 6 months.
Wait a minute. You qualified for this job.
Yeah.
But you are then told you have to follow process.
Yeah. But they'll break protocol because normally it takes a year minimum to move from one grade to another.
Okay.
So they broke that protocol because from 10 to 7, they moved it within a year. So pretty much within 6 months, because the immediate one was the next Monday or whatever. And then
so I'm trying to wrap my head around
6 months later. So I was getting salary bumps very quickly. It was cool.
But okay, I mean, it was
statistics.
It was 20 years ago.
Yeah.
Do you see something like that happening today?
Yeah, it's actually very possible because out of merit, you find people who are very smart and they don't have to still follow a defined path.
Correct.
So even today, the engineers we hire, you'll find there are people who are fresh from uni and are doing so well. So by the time we bring them in, let's say they came in as an intern and they finish, the entry level, the gap is like huge versus someone whom you brought in who has experience and so on. We'll match them.
Immediately.
Yeah, they're doing
Exactly.
Yeah, so you don't have to tell them, you have to
That's
go
what
through
I mean,
this and
Rose.
so on.
Yeah, because I mean, even as we talk today about lack of jobs, but the real superstars have 4 or 5 choices at the same time.
Absolutely.
So if you tell someone, look, you've qualified for this, but we have to follow internal processes. So we'll bump you over a year, and there's Google and Microsoft waiting on the sidelines. What do you think that young person is going to do?
They'll probably go to the other one. Yeah. However, if you have a good culture, they'll say, well, I understand, and may stick around.
If they have a good
If you have a good culture. Because again...
That's interesting. I'm loving this HR conundrum that you've sort of brought up as you grew, in your career. So question to you. If you were not working for that bank at that particular time and you applied for that job, and in the other job that you were junior, what would the bank have said?
Well, if they had asked me, how much are you earning where you are and so on and so forth, they probably would have brought me in and given me a lower band or something. Because I don't know. When you're on the outside, you don't know. You'd probably be like, well, so long as I've gotten a salary bump, I've joined this company, which is great.
Interesting.
Fine.
Very
but now when you're inside, you have more information. And I think what I appreciated is the fact that they accelerated the process. They didn't tell me no. They didn't tell me you have to go for 3 years. So within a year, and a year moves very quickly, like what we were discussing earlier, I was now in the band that role was meant to be.
So business intelligence, or is it business analyst at the bank?
Yeah.
It is Standard, right? Not Standard Bank.
No, Standard Chartered, yeah.
So how was your experience during that time you were at Standard for that business intelligence, and where did you go from there?
Oh, it was amazing. I think it is one of those roles that was really eye-opening because you get to deal with many parts of the business. And I had a colleague that I was working with, and we created the very first ever scorecards for the bank. And until today now, they have more sophisticated ones. It's more...
Speak to me about those scorecards. What were they about?
Essentially just being able to measure individual performance using data. But now the data is put in a scorecard, which now dictates your performance appraisal. So
interesting.
It was very...
So data never lies.
It never lies. And it made me speak with so many people because now, as we started with the first cohort of people who got the scorecards were the branch managers. And they would call me and tell me, please make sure you've seen this revenue that has come in. Make sure you've booked this customer because it's important. And we went to the level now, we moved away from annual bonuses for branch managers to quarterly bonuses.
Wow.
So the scorecards we would put out would mean this is money that you're going to earn this quarter. So it was very important that the data is accurate. You feel the pressure when they call you and they're like, please check on this, do the other. And because that time you're young and the branch managers are
unimpressionable,
older. Yeah, I like saying that. So there's a power distance as well.
Yes.
Where you sometimes have to drop what you're doing because a branch manager from a very huge branch has called you and they're quite senior
those
people.
Are really powerful people.
Yeah.
Branch managers then. I'm not sure about now, but then.
So it was interesting. But it also helps you to see the other side where without the numbers or without that data, someone could actually be telling you stories. We met this customer, we have this pipeline, we have this and the other.
So you needed to see those numbers and you need to correlate those numbers with vitu kwa ground.
And it actually boosted performance very much. Like people would really work towards the end goal because you can calculate your bonus backwards. So you can say this is the pool, because we were very transparent about it. This is the pool.
This is a pool of bonus.
Yes. And if you get to this score, this is how much you'll earn, and so on. So you can work backward and say, if my bonus is going to be 500,000 bob as an example, or 1 million bob, or whatever the case is, what do I need to do to get there? And then you can now mobilize a team in the branch. So started with branch managers, went to relationship managers, then all the way until tellers. Everyone now eventually had a scorecard.
Across the board.
Across, yes. That was fun. I really enjoyed it.
How many years to spend there?
8.
8 years.
Yeah, I was at
But
Stanford
you
for 8
grew
years.
within the... Okay, so after that?
After that, I went to do product development, which I really loved as well. Even until today, I love product development. So that was looking at whatever products we have, what new ones can we come up with, the ones that exist, how can we make them make money, and what activations can we do. So that was also a very fun stint, because it moves from an idea to an actual product. And then you start looking at the revenue. And I think Stanford was a very good training ground, because you get to understand, no matter which level you're at, you understand banking at a superior level.
Interesting.
So when you're talking about whether it's going to be your net interest margin, when the money is coming in from customers, how does it translate to the lending side? When you're talking about your core capital, like, we pretty much understood all those details. And yet you're not even at the executive level. You still understand banking. Operations was top notch. Like, you have to be really, really careful about your operations. And KYC, treating customers fairly. Like, it was a very, very good training ground. So that was actually quite fun.
Okay.
Yeah.
It's super interesting. So looks to me like you're still a banker at heart.
I don't know. This is history. I now I can challenge the status quo.
Shall I say you're a recovering banker?
It's the whole thing of, because it was a fast job.
Yes.
And you learn a lot, and you get to see, that was pretty much my universe. If I probably had started in oil and gas, that would have been my universe. Then I would have been so excited about it. Yeah. But then when you leave, you're able to see things from a different lens.
From different perspectives.
Yeah. Especially now when you deal with a micro space. And I'm like, oh my goodness, have you talked to one individual after the other? We are aloof if you deal in the corporate world.
Completely, yeah?
Yeah. You feel like you're aloof. Yeah.
So, from junior employee to mid-level management, how did you break into C-level executive management? And talk to me about that.
Right. So from Standard Chartered, actually, I moved to Chase Bank. And it was a very interesting coincidence, because, let me give you a fun fact. I apart from preferred personnel, that time when I applied.
Yes.
And then now internally, Stanchart, the data one that I applied for, I've never applied for another job.
You've just been headhunted.
Yeah. So everything else has been a headhunt, which I really am grateful for. So I actually met someone who was at Chase Bank, and they said they were looking for someone to do products, and they know that I used to do products. And they really, specifically that time, they wanted someone to do Chase Woman. So I went for the interview. Yeah, they had a product called Chase Woman. So at the interview, they said, really, we can't give you Chase Woman. We're going to give you all the products, because this will be a very small portfolio for you to deal with. So we have all these products. So there's retail, there's SME, and so on. So when I joined, I went to do products for Chase Bank. And then I was there for close to 3 years. But within that time, at Chase, yes. Within that time.
What was your role there?
So that was product manager.
Product manager. Okay.
Yeah. So they used to call me the Undertaker, because Chase Bank had, I think, over 130 products. And it was doing pretty well, and it was well known as an SME bank. But if you drill down into those products, it was the same product, just renamed and replicated. So what was happening, and it was feedback from the sales team, they said, I'm a salesperson from SME. I go to visit company X, and I'm selling to them these products. Then we have a salesperson from agri, which is the agriculture segment, they go to the same company because that is an SME, but in the agriculture segment. And then they're selling to them the agriculture titled products. But deep down, it's the same thing.
It's the same core product.
Yes. And then maybe they're getting funding from some agency. So corporate banking will go to see them as well and tell them we can also help you on the corporate banking side and give them the corporate products, which deep down are the same, but the heading is corporate. So they actually used to joke about it that they meet like in the waiting room. As these ones are leaving, they are coming in because they didn't know they have all booked the same client.
What?
Yeah. And then now what would happen internally is, let's say the customer says, yeah, actually the agriculture product makes more sense. They would do the I call it left pocket, right pocket. So you tell them, close this one because it doesn't suit your need and open the agri one.
At the same bank?
Yeah. So you don't need to bring new KYC. We'll just convert you. So on the agri, it will be booked as a sale. But is that really a sale?
No, it's not a sale.
It's not. It's just money moving from your left pocket into the right pocket.
Twin Peter to Twin John.
Yeah. So we had to do something about it. So that meant really streamlining and rationalizing the product so that we reduced them from 130.
Now I see why you are called the Undertaker.
Yeah. So we had 30 very distinct products. Like if you're in agri, it's very distinct. These are the features. If you're in, which other segment did we have? I think we had something for churches, very distinct. Like no customer would actually be caught in between. What do I take? What do I take? Yeah. So that was something which.
So how long did it take you to do that?
Well, because you have to do, you just can't wake up and say, I am killing the following products. There was a lot of stakeholder engagement. You have to talk to the various directors in who head the various segments.
Yes.
You have to pitch it to the executive team. Why do you want to do this? What is the reason? What impact will it have? So I'd say it took probably around 6 months to do the whole thing. But it also made...
That's a short time in a bank.
Well, it's because the products exist. So you're not leaving people with nothing.
You're just transitioning.
Yeah, you're just transitioning. And you're saying from today onwards, this customer is in this segment. They're not going to be double booked unless on there's business, there's personal. That's it. But you can't now say in business, you're now in 4 different categories just because we all want to sell. So if you have an RM, the RM needs to sell to you everything. They need to sell to you. If it's a loan, they need to be well versed. And now it helped them as well because they said they can now be able to sell since the products are fewer. They understand the names, they understand the features. Before they were like, I'm going to sell what I remember. We all have a bias. It's called the ease of recall.
Correct.
So you'll sell or you'll talk about what you remember, not everything else. So that helped.
It helped.
Yeah.
Okay, good.
Then from there now.
So you streamlined to a maximum of how many products at the
30.
end of it? 30.
Yeah. So 100 just were repetitions and
what was the impact?
permutation combination.
What was the impact?
I think actually the impact was really positive because the bank was doing really well. Truly, the bank was doing very well. Then now we saw we had a gap in retail because the bank was known for SME and corporate. So we needed to now do something for retail. So the CEO actually got McKinsey in, and there was a huge project, the retail banking project. And 6 of us were chosen to now join that project to define retail banking as it is today. So even today when they talk to me, they're like, oh, would you want this product? I'm like, yeah, I remember when we were creating it, we were saying this feature and this feature. So it's nice to see that the products are still there until today, notwithstanding the bank has changed names.
Yeah. So product manager, 3 years.
Yeah.
From there?
From there, now I left banking and I went to credit bureau.
Wow.
Yeah. A different
TransUnion
world, yes. And the interesting thing
How
about
was the transition?
they reached out to me on LinkedIn.
TransUnion.
Yes.
LinkedIn.
And I was like, well, I know Credit Bureau, but I don't know much about what they do. I just
What
know
products they're
what we
selling.
consume.
Yes.
Yeah. I don't know how big the team is. I don't even know how they make money and so on. There's a lot I need to know. And then the information was not available, like where you'd go and say, let me understand, at least
Not
for
like
the Kenya
today.
context, not like today. That was in 2015.
Wow, that's about 10 years ago.
Yeah. So I applied. Not applied. I went for the interview because now they had reached out
On LinkedIn.
on LinkedIn. And I went for the interview. And I remember telling my colleagues at work that I'm actually contemplating going to work at a credit bureau. Let me even sip my tea before. So the funny thing is, always look at whom you're surrounding yourself with. Because all of them, with no exception, 100% of them said, why would you want to leave banking, which is safe? You get loans which are affordable, like it's a bank. So they
Complete comfort zones.
It really massive comfort zone. But my husband, on the other hand, was like, the fact that you don't know what they do makes it more exciting. And it's a smaller company, so you'll be able to do more things. Your span of control will also be bigger. Because I was joining...
That's your husband telling you
Yeah. That. So actually, he's the one who made me say, let me take this leap. What's the worst that can happen? And I was joining as director of products and strategy for Sub-Saharan Africa. That was a big deal. Yeah.
For Sub-Saharan
Yeah.
Africa. So they were not hiring you for Kenya.
So I was looking after Kenya, Zambia, Rwanda, Malawi.
But based in Nairobi.
Based in Nairobi, yes. So
why would you say no?
Yeah,
why would you say no to that?
Of course, I was like, let me go and I really do not know how credit is done in Zambia, but I'm going to learn.
And in the scheme of things, TransUnion is a global multinational.
It is, yeah, it's huge. Yeah.
So,
but in Kenya, it was small in terms of we just never used to appreciate credit bureaus for what they're worth, even until today.
So what's the lesson there in terms of the transition? What's the lesson there? In terms of transition, in terms of who you speak to for advice, in terms of your internal retrospection about the move.
Yeah.
And the fact that you had a supportive partner at home.
The lesson there is the people you surround yourself with can actually be looking at it as they're giving you advice out of their best interest, but is your best interest,
yes.
But is it really? Because it's coming from a point of fear. So listen to what they're saying. And again, one thing I learned, especially when I was doing my master's, is when you talk to someone and you ask for advice, the same bias, ease of recall, comes in. So what they'll tell you are stories that they remember. They'll tell you, but I remember there's a friend of mine called Ali who tried to get into business and it didn't
never
work.
out.
So that is their example. Not all the others who went and it worked and they're fine,
Because they're not in that sphere.
Yeah. So that bias is really important.
So ultimately, weigh your options.
Yeah.
And then make your own decisions, not based on what other people are saying.
Yes, very true.
But what would you say about the support system at home?
Oh, it was amazing. As in all the jobs I've taken, because people reach out all the time. Your LinkedIn is full all the time. But the ones that you specifically say, let me, I always ask him, like, does this really make sense? And we go through the motions and we go through, will this work? What's the worst that can happen? And if it doesn't work out, it's fine. I still have a home to go to and we will pick ourselves up and we will still,
I love that.
Carry on.
I love that.
Yeah.
So how many years at TransUnion?
I did another 3 years there.
How was it?
I think TransUnion is what pretty much defined my whole life as it is today. Going forward. Because you're asking me how did I get into the senior level, because that was the beginning.
Yes.
So I became a director at TransUnion. I I was traveling quite a bit because I had to go to the other markets as well. And then
Good exposure.
very good exposure. And then I got to see and interact with people who I wouldn't have if I stayed in the bank. So this is what I mean. Here we're defining products that we need to sell. And the products we're selling are for financial institutions. So that's the time we're starting the credit scoring. We were mainstreaming it. And then eventually a year later, we did the mobile score. And we needed people to understand, what is this? Why are we using it? Because other markets use it. And we need to start embracing it. So every time we would book meetings, it was not to go and see your credit approver. We are either seeing your head of credit or credit director or the CEO or
So you're now
the
starting
person
to
in
operate
strategy.
at sea level.
Yes. So if we book a meeting and you tell us, we look at the audience who's attending. If it's going to be the low, mid-level, we won't show up because it's just going to be a waste of
Too
time.
much back and forth.
Yeah. So when you go to that C level, the C-suite level, and you show them, all the time they would ask, why are we not using it? Why have we not implemented this? Because they see the value. But at the bottom there, they will tell you, they're like, oh, we have to think about it. We have to consider, we have to do this. I have to talk to my manager, I have to do the other. So it ends up wasting your time. The other thing it really helped with is hardcore sales. Let me tell you. Oh, I keep joking about, there's a sentence I like saying, I don't have a hard time handling rejection. Truly, when you're selling, hey, it's not personal. What I may reject, but it's not you they're rejecting, it's the product.
Can you repeat that statement? I love that statement.
I don't have a hard time handling rejection. Yeah.
I don't have a hard time handling rejection.
Yeah.
Because that's part and parcel of what you do every day.
Every day you're selling. Every day. So you'll call, someone will just either ghost you or they'll tell you. And I think there's something as Kenyans we like doing. We don't want to sound mean to you or sound like we've shut you down. So we'll just keep promising and you're just never going to buy.
For me, one of the most favorite Kenyan sentences start with yes, but.
So the but already negates what they're trying to say. So, yeah. So,
Wow. Okay. So, TransUnion, 3 years.
Hardcore
sales, getting to understand how to interact at sea level, getting to understand other markets.
Dealing with a lot of data.
Which is something that you started with. So it's your comfort area.
Yeah. It really was fun.
So from TransUnion.
So it ended up being that one of the products that we were selling, I think it was an ID check or something or the other. The team that was consuming it and wanted to see how it works happened to be Tala. So they used to come to the office many times, but now because at that time I was the acting CEO, so they would deal with the business development team for TransUnion.
For the region or for Kenya?
That was for Kenya specifically.
Okay.
And then I was still doing product and strategy for the rest. So I think based on, I would say I'm grateful for the fact that I'm able, remember all these things I've been learning?
Yes.
Product,
you're
data.
I mean, it's almost like you've been collecting these jigsaw puzzles that are now starting to fit together into Rose Muturi, the CEO.
I suppose.
Yes.
Yeah. So when I had a chance to meet them, I was able to now give them a picture of this is what you can be able to do with the data that we have. This is what will help you with, because the most fundamental thing is KYC. Once you get it right, the rest you'll be fine. And coming from a banking background, I fully understood. I started with KYC. I understand why it's important.
Absolutely.
And I used to
know
sit,
your customer.
Yeah, you're sitting with forms every day. You better get your KYC right. So actually, after I had that meeting with them, and I remember it was like December. I remember it was just Christmas time. Now they sent me an email and said, hey, would you actually want to come and lead the team at Tala? Now, because they had explained to me what they do.
How long was that?
From the time I met them,
Yes.
I think like a month or so.
They didn't take too long.
No, they didn't take long. No. So And I was really intrigued by what they're doing because it's exactly what we were trying to push from the bureau side, where we were saying, can we use other data? And we were trying to push for
a so-called alternative data.
Yes, then it was alternative.
Yes.
So because at the bureau, we were really trying to get other sources. We would go to Kenya Power, we would go to Nairobi Water, we would go to, we had asked National Health whether they would help us also on the KYC and employment data.
NSSF.
NHIF. We didn't want medical data. Yeah, the former NHIF.
Yes.
We just want, because they're very good with records of employment, and they were like, if it's going to help the ecosystem for people to access better credit, for people to access better services, we're happy. But it didn't go through. We had gone to Huduma centers like we really used to sell. We really used to pitch.
Interesting.
It was a lot, because you're like, the more data we have that makes sense, the more the ecosystem works. We had done a project for AKI, Association of Education Insurance, so that they can be able to participate in the mechanism as well. But now there's some battles which are bigger than you, because if you want to do it as one company, that's TransUnion, it doesn't help much. This needs a whole ecosystem. It needs push from either government or central bank or someone else, as opposed to one entity, because for us, I think it was being assumed as it's an unfair competitive advantage. So they wanted to look at it from a larger level.
Okay.
And I think CIS Kenya is doing that part, which is fine. So, but the sales was interesting. You really, really sell. And you get so excited when that payment comes
through.
Yeah, so every day you're sitting with finance and they say, okay, this customer paid or client paid. These are the ones that we're waiting, our receivables and so on. It's really hardcore. It's yeah.
So you moved to Tala.
Yes.
After 1 month, you were selling to them. Kumbe, they were looking at selling to you.
But yes. And yeah, so that was also a very fun stint as well, because I think I really loved the fact that we're doing something new. It's not been done before, and it's going to challenge the status quo. I like that.
I'm really fascinated. I've always been really fascinated by how the Talas sort of brought in a whole new thinking around usage of KYC and so-called alternative data.
Yeah.
When these guys launched the first time, because of who I am and the role I play in the industry, I signed up to start to understand the product from a first-person perspective.
Yeah.
And it's really it was revolutionary then. How many years ago was that?
So launched in 2015, because I joined them in around 2017, thereabout, yeah.
So you have this company that comes into a country and say, we'll give you money. We don't know who you are.
Yeah.
We have, from the look of things, we don't know who you are. But kumbe in the background, they actually know exactly who you are, your habits and your stuff, and they start giving you 1,000 shillings and start growing. Just, unpack that for me and really unpack that for me. And for my subscribers, the audience.
So, an economy thrives when the credit systems are working. I'll start from there. So if you look at the developed world, a lot of people will tell you about their credit score and everything they're buying is on the credit card and so on. That's because data is available, the patterns are available,
Correct.
and the whole ecosystem, money just keeps circulating. We had a fundamental gap in the country. When I was in the bureau, we would talk about having 4.5 million records of Kenyans.
4.5 million.
Yeah.
Okay.
Out of an adult population of more than, say, 25, 30 million, which means we were just recycling the same population. So these are the ones who are employed. Everyone was after them. And then you have, especially the public sector, everyone would go after them.
Okay.
And then you also had the other side, which is the SMEs and the corporates which you can lend to. And that was it. Now, what about the rest? So when such companies came in, it was to now challenge that the ones who are deemed not creditworthy because they don't have pay slips, they don't have statements, they don't have formal financial records.
So the underbanked or the not banked.
Yes. What other information can be used? So I remember when we were having that discussion, that's what made me move, because they explained to me, this is what we're going to be doing. And I was intrigued. I'm like, this I want to be a part of. I want to see how it works
this moves.
and the impact it will have, because all people need is a chance. Like, trust me with some money, but we don't want to trust them because we don't know them, and it's chicken and egg. What are you going to do? So no one is willing to take the first chance.
Risk, yes.
However, remember today, if your credit record is great, everyone is after you.
Correct.
I keep getting offers and offers. They tell you, move your salary, we'll do this, we'll do the other. They bring you notebooks, they do this.
Yes.
But before that, no one is interested. So that is why actually I said I want to be part of that story. And because these are models being trained, it also means there's school fees to be paid, where you will have to give money to people and then get to know who's good, who's not. That's the only way you can train your model. And based on the ones who pay, now you build.
That's interesting.
Yeah, through that. The ones who don't pay now helps you to define what does the probability of default look like. So if you did statistics, now those are very fascinating things to look at. You're like, wow.
So your background
Yes.
in stats now comes into play.
It comes in because it's all about the probabilities.
So if this information is you're able to share publicly, what sort of non-performing loans in percentage terms during your period at Tala? And did that reduce as you continued to refine the products and the sort of profiling of your customers?
Well, so the probabilities of default were, or the default rate, let me say, was actually always less than 10%. And it was great because, number one, we didn't have the pressure that we have to show a profit. Because remember, this is a startup. The advantage that they had was funding and long-term. And it's...
So yours, you were thinking long-term.
Yeah, thinking long-term. So build the foundation, build the basics, and make... my role was simple. Make the brand known. That's number one. Number two, when it comes to stakeholder engagement, because, you're doing something very different, it might cause a bit of panic. It may make people misunderstand. Handle that piece. The data scientists and the others will handle the default. And then there was a marketing element as well, which was fun. We used to go into the ground and, talk to people, spend a day with them, so that at least even from my perspective, I'm not just saying, we believe these customers will do the other, or, no, you're there. You've spent time with the customer.
Amazing.
Yeah, so that meant lots of conversations. If there are workshops to be attended, or if there are events to be attended, just going out and telling the story, because you need to do that. Even today, the folks who are dealing with, say, AI for whatever purpose, there's a time they had to attend various forums and tell people, this is what's coming, this is what we need to do. So that's what we were doing that time.
Great. Yeah. So, from Tala to branch.
HF was in between.
Sorry, from Tala to HF, yes, of course.
Why did I go back into banking?
Yes. So Tala, then you went to HF.
Yeah.
Chief Digital Officer.
Yeah. The MD sold me a very good story. He's very good, actually, because we were going to do like a turnaround strategy. But I really did not do well in that role. I have to be very honest, because...
Tell me about that.
Coming from a very high speed, like almost flat hierarchy, to say.
Yes.
And things are moving very quickly. Decisions are being made very quickly. Then getting back into banking was a bit of, let me call it a struggle for me personally. Because even TransUnion was very quick. Like, if you want to do things, so long as you've pitched it and you've said what you want to do, you might be told, okay, we'll give South Africa precedence because it's huge and things are working. but you're definitely going to do what you need because yours is more
decisions
exploratory. Decisions are very quick. And so here I am, and this digital financial services was not making money, but we were spending a lot of money because of all the tech that we've invested in, the many customers who have come in, and the institution in and of itself was also not profitable then, because that's the time we were brought in. So there's a lot of pressure, especially coming in from the board, the market, everywhere, that we need to turn this around. But I guess on my part, I was looking at it as, am I the weakest link in all of this? Because my business unit is the one big spender, but the return we're giving is so little.
It's so little.
Yet we were doing a digital transformation. It's supposed to be the one that's going to help us save costs and so on.
So there was a disconnect in terms of expectations of returns and building for the future.
Yeah. It really was. It was tough for me, I would say, because we built some amazing products and they're still there until today. And now they're working because we did like a school fees product, we did the home ownership plan, we did a savings plan, FX, many, many amazing products. But the amazing thing is, and I remember our manager used to say, revenue solves everything. I took that sentence. I also say it until today. Revenue solves everything. When you're making money, you can do stuff. You can experiment. You can, say, we're going to do this. The return will come in 5 years. But when you're not making money, it matters. What you build, what you do needs to show return faster.
Yeah, but then, then two different cultures too.
Yes.
Because you're coming from Tala, where the whole DNA was, we are building for the future.
Yeah.
Yes, profit is important, but we can postpone that a little bit.
Yeah.
Then you're coming into an organization that was focused on profitability.
We must turn
Not
it
even
around.
path to profitability, what I call P2P, but profit now.
Yeah. We have to, because it's a publicly listed company, the investor confidence needs to be returned because the share...
How did you handle that sort of pressure?
Oh, my goodness. I think it's the one time where I probably disappeared for the 3 years. I was so not, like the way I like participating in forums and so on.
You were just completely unavailable.
Yeah, because I'm trying to think about what can I do? Or what can I build? What can I fix? And then COVID came in, actually.
Wow.
Whereby the central bank said 0 rate fees and God knows what. And you're like, the income streams that we have
dried up.
Yeah, because people are being driven to digital, but we've been told don't charge. So that means, again, you have to postpone the revenue that you needed to make. So for the very first time in my life, I was a poor performer.
Experience, right? Part of the experience. And I'm really impressed, Rose, that you're actually talking about this.
Yeah, I was a poor performer. So I'm like, this is what people feel when they're a poor performer.
So what's the lesson there?
The lesson is, or let me say, I think I was carrying a lot of weight on my shoulders because I felt that where I was before, and we were doing some extraordinary work. Things were working very well. The company was actually doing pretty well. That level of expectation is what was expected here. That's what I was telling myself. And maybe not. Maybe people expected that this will take time.
Different environment.
Yeah. But for me, I'm like, I think I'm supposed to make it work now.
No.
And it's just not working. And all the KPIs we've set, I am below target by far because the costs that we have are still there. The costs don't go anywhere because it's technology costs. You have to pay for them. The customers are still using the system and you have to pay for that. You're looking at the fraud element because that's the time we're also getting fraud coming in. And then the revenue has been postponed. It's not that it's never going to come back, but we don't know when COVID is going to end on the other hand.
That's interesting.
Yeah. And the new products need time and need marketing. So the catch-22 becomes we don't have that much money to market, but we have fantastic products in the closet that we need to talk about. So I'm really glad that right now those products are really working well. Yeah, because they were very good for deposit mobilization.
So you left infrastructure that you
Yeah.
built with your team, but didn't perform when you were there.
Yeah.
But now seems like it's working.
Yes.
How do you feel about that?
Well, one thing you learn when you're especially in product development is never get emotionally attached to the products you develop. Some will work, some won't. Just let it be. Because even some we designed in TransUnion, like Nipashe, is still there until today. It still works. It's amazing. But even if it didn't, it's not personal. It's just
not
a
personal.
product. Yeah. So
Hakuna makasiriko.
but really that one for HF, I actually, because when I was looking at the performance and my numbers were actually really low, I actually opted out. I told them that I
can't.
I begged to leave. Yeah.
Wow.
Yeah, I actually opted out because I felt like maybe they can actually do a different model. Because now I had changed it and I had said we don't need new customers coming in, doing digital. We can
Let's focus with
digitize
what
the
we-
bank, like
Yes.
the existing customers who have mortgages, who have whatever. We now create products for them to use digitally. Now that was the angle.
Okay.
So it was a bit controversial because there were millions of customers who had come in through Wiz, but they were costing us a lot of money because to sustain that volume,
Yes.
you have to pay a lot of tech costs.
Infrastructure costs.
Yes.
Infra. Yes.
And they're not transacting, they're just there. And then now you have the other base, which was around 50K, that are good customers. These are people, because HF was known for mortgages. By the time someone has a mortgage, one thing you learn about bank products, someone who has a mortgage, that's the last thing they want to default on, unless
That's correct.
it's the worst case
They
scenario.
can't do anything
They
about it.
don't want to lose their house. So we had a very good crop of customers. And then SME had just been set up. It was set up when I joined around the same time. And now we wanted to digitize the SME side.
Wow.
So SME, the products we built for them, right now they're doing very
So
well.
what was controversial about it?
The fact that we had to shut down and close accounts for hundreds of thousands of customers. Yeah, because they were just not
Such is
transacting.
life.
We didn't have full KYC on them. That's the time you could pick up an ID on the road and open an account.
Wow.
So I remember when we were having the discussion with the MD, we decided that reputational risk has more weight than an unhappy
Customer.
whom we don't know.
Yeah.
So we would rather lose, because it's a vanity metric to say you have all that many, but they're not transacting. Yeah.
It's interesting. Now your current role.
Yeah.
Branch International.
Yeah.
One of the first, if not the first, fintechs to turn the tables and say we are acquiring a bank. Microfinance bank for sure, but we're acquiring a bank.
Yeah.
I've always talked about the fact that banks seem to want to be fintechs and fintechs seem to want to be banks.
Yeah.
You seem to, Branch International seems to have meshed those two seamlessly.
Yeah.
So how did you get the call to join Branch?
LinkedIn.
We'll talk about
LinkedIn is a great tool. And actually,
Yes.
interestingly, because I had opted out of HF, there's many who believe that I left to go to Branch, but actually I had left to go open a restaurant. And it's still there until today.
So
I was this is it.
You left
Nikauze
bank
nyama.
ukwenda kuuza nyama choma?
Yes,
No way.
I promise you. Yeah.
So you started a restaurant.
Yes.
And in between that restaurant, a call came From branch.
on LinkedIn. So that's the time I actually was serving notice. I'm like,
My phone is telling me
It's time.
we are about time. I'm going to ignore it for a few more minutes. This is too interesting.
2 minutes. So at that time, actually, I was pretty open, but I didn't want to go back into financial services.
Okay.
I had it. I was like,
I'm done.
let me be a customer. For now, let me just be someone who consumes financial services.
Yes.
I don't want to deal with it. Then again, spoke with my husband who said, you have absolutely nothing to lose. Listen to what they have to say.
How many months?
It was actually within the same month. Yeah.
You were one lucky girl.
I promise you. So the co-founder came in and he said, let's just have a conversation, because I actually was saying I can listen and probably give my opinion,
but I'm
not keen on getting back into financial services. So what was supposed to be like a 1-hour conversation, remember we met at the junction, we spoke for close to 3 hours.
Wow.
Just going on and on about so many things. And then I remember at the end, he's like, let me just send you the JD anyway. Just have a look at it. It there's no harm. I was like, fine, send me the JD. And then went home. I went to the restaurant, spent the day, sold nyama.
You had already started the restaurant?
We had already started, yeah. So in the evening, when we were discussing with my husband, I said, well, they've even sent me the JD. He's like, yeah, just talk to them, have an interview. And that was one of the fastest interviews I've ever done, because most of the senior folks were based in the US.
So you had a virtual interview?
Yeah, we did a virtual one. And it was like 3 hours of back-to-back interviews, because they said they want to make it very short. They don't want to take too much of my time.
3 hours back-to-back?
Yeah, as opposed to many days of today, you're talking to this person, tomorrow.
Wow. That must have been tiring.
I'd rather just do one session. So had to speak with the chief of people, chief credit, chief technology, all of those
CEO.
folks. CEO was later now. And the conversation with the CEO was really a conversation. He actually said, well, this is what I'm telling you. This is what we're doing. And we have 2 other MDs in India and in Nigeria. Talk to them. If they tell you they're having fun, join. If they tell you they're struggling, don't join. Just ask them for their honest opinion. That's actually what he told me.
Oh, wow.
Yeah. So it was not.
So you spoke to these?
Yeah.
2 guys.
So they set up a call. I talked to them and they were like, well, this is actually a very flat structure. You own your decisions. You own your P&L. If you say today we want to go to the moon, no one is going to tell you no. They actually expect that you are doing the best interest.
Wow.
But just don't burn it to the ground. And I said, okay, this is different. If I own the decision and I'm able to say why we want to do something, and you don't have to go through a lot of red tape, why not? But mostly it was to cross the transaction over the finish line, because they had started it. It had already been announced.
Century.
Yeah, the acquisition of Century. So it was just a matter of completion and now bringing the 2 companies together.
So that was new for you, right?
That was new, but it was so much fun, because I was like, this is the first one we're doing ever in the country. Let's do it. This is going to be
I think in
cool.
Africa, if I may.
That's even more exciting.
Africa,
So that really is what motivated me to join, because I said it's going to be in the annals of history that we were part of it. And that's what I would tell the team. When a book is written about such transactions, you'll be the team that will be spoken about.
So let me tell you something before we shut down. I know you have to rush to
go sell meat.
To go sell meat.
Yes.
Let me tell you something that was a first for me. When I first opened an account at branch. Number one, I don't know where your branches are. I don't. And I don't care.
Yeah.
That's number one. Number two, the experience was so exquisite that I really felt like I needed to actually move my primary account into branch. I haven't yet, because I'm still not sure.
About neobanks?
Yes. No. I'm sure about neobanks.
Yeah.
I'm a diehard fintech guy.
Yeah.
Just not sure where the organization is going. But the other thing that really made me sit back and say, wow, this is different. branch gives you a deposit product and tells you what percentage you will earn for the year. In your face, you don't have to discuss with anybody. That was a first for me.
Excellent. But I haven't paid for this product push, but thank you very much.
No, I'm serious.
Yeah.
I mean, you've known me for years.
Yeah.
If it's, I'm an equal opportunity offender.
Yeah.
So it's something that for me was like, this is game changing. Something very simple, very, in your face.
Yes.
Why do you think other financial institutions have never thought about that? And what's different?
Let me even do this because it's getting hot.
Yes. Working in a neobank than working in a traditional financial services play.
So, so let me put it this way. Number one is one of the benefits we have or we got was we had people who were interacting with the platform for years because the company was launched in 2015. And we said, there's reasons why we're doing this acquisition. More importantly
Give me 3.
We needed to start getting our own deposits.
Okay.
That's one.
Crucial.
Number 2, we still needed to get our own deposits. Like that is it. But that's because, especially during COVID, the funding taps just closed up. Where there was uncertainty.
Yes.
And the lenders who would give you like debt capital, all of a sudden were coming up with different terms.
Yes.
And then if you're raising commercial paper locally, it's really costly. So if you look at your cost of funds and you're running your own P&L, you're told, raise your own funds.
Yes.
And some markets, like for instance, if you go to India, they have their own dynamics of raising funds. Banks are able to lend to our India business very well. Here we would look for funders, and most of the time we would have to settle for these private funding companies.
Correct.
And their terms are very, very, very costly.
I remember you raised about 500 million
yes.
a couple of years ago.
Yeah. So there was that. There was also the commercial paper that we were raising. So it's this slippery slope where you have to keep raising and the business is growing. So on the other hand, we said, because the customers kept asking, can I save with you? Can I keep some money? I'm pretty sure a lot of digital credit providers are asked the same question sometimes. The only way to do it is to get a license to do that.
So for you, the transition was a no-brainer?
It was a no-brainer because right now we have such peace of mind because our liquidity is at 6. Okay, let me not say no peace of mind because when you have so much liquidity, you still have the pressure of you need to use it.
You need to use it.
But we don't have the pressure.
So the problem is now different.
It's different because so many people are banking with us.
Completely opposite.
And what I like about it is they normally, sometimes if they're new to the platform, they'll call Central Bank and say, I'm actually putting money with branch.
They will call Central Bank. Have
they been approved? Yeah.
What?
Yes. So sometimes I just joke and say, CBK, some of our RMs are seated in there. Because they'll tell them, yes, it's fine. Just go to our website, look at the ones who can take deposits. KDIC always publishes in the paper and says these are the ones who have your deposits and they're protected and so on. And one of the things that we did intentionally.
So my audience, KDIC means Kenya Deposit Insurance Corporation.
Yes.
That means your deposits are protected by this organization, this insurer, to a certain
extent, yes.
Yes. Especially for the small and medium-sized depositors.
So remember background, I have statistics, I have product and so on.
So it's the jigsaw puzzle.
We're putting it all together.
The last one is...
This is it. So when it came to now defining the lending, the banking products, it was really easy, so to say, because I understand quite a bit of banking. I know what can be done, what's different and so on. And when we were talking about the investment products, because it's a global team that we normally share ideas, we came up with, let's call it investment. Let's not call it savings. And then, let's make it very easy for someone to understand you're investing your money. And in Kiswahili, we say, wanyama wote wako sawa. So whether you're giving us 200 shillings,
Animal Farm,
or you're giving us 10 million, It's the same rate.
It's the same rate.
It's the same rate.
That is actually also revolutionary.
So we get calls, our customer says, but I have this amount, please consider.
Same rate.
And we're like, well,
Same rate.
wanyama wote wako sawa.
Wow.
Yeah, because this person putting in 200 today, tomorrow will put in 1 million, 2 million. And they'll not have to haggle and feel, I don't deserve your all. So the only difference is for how long are you putting in.
Yes.
That's where we vary the rate.
I see.
But the rest is the same. Yeah.
Interesting. Rose, I know we must come to an end. This interesting conversation must come to an end. Lazima uende ukauze nyama.
Lazima kauze nyama manzi.
But my last point to you as we close, how do you see the future of neobanks in Africa? There's this debate about omnichannel. You must have some branches or agents, and you must then also make sure that your digital platform is seamlessly integrated.
Yeah.
You know, if you look at some of the big banks like KCB, they've just announced acquisition of 2 fintechs in the last 6 months. How do you see that panning out? If I may ask you to pull up your crystal ball.
Well, so I think what's going to happen is a lot of coexisting, because as a neobank today, we rely a lot on existing ecosystems. So we've partnered with the ones who've done the heavy lifting before, because we don't need to reinvent the wheel.
100%.
And we're usually not scared of what if they take our customers. We say if our product is really good, the customer is going to be there.
I love that.
Yeah. So if I'm cagey and I'm like, no, I can't partner with, it means your product is not good enough.
I'm always saying that you don't own me as a customer.
Yeah.
For as long as there is value created across, you create value for me, I create value for you, we'll have a relationship.
Absolutely.
There's no ownership.
Yeah, there's no ownership. And I'm a huge fan of open banking. That's why I'm participating in the forums.
Correct.
when we're asked to participate, because you can see the larger benefit.
Correct.
And so therefore, like today, we normally say, as a neobank, we don't have the last mile. If you have cash, we don't know what to do with it, because we don't have the physical presence. However, there is a partner that we are working with, and we're just about to finish, that is a bank that is going to give us access to their branches and ATMs
To their branch networks.
and agents and everything.
That is amazing.
So someone else would be like, you're seriously going to give a bank access to your...
Yes.
But on the other hand, the customer actually needs to still bank. And it was a very quick conversation, very quick decision that we made together with our bank. And we said, you have something we don't. You have the network.
Look,
So we need you.
I'm sorry to tell you this, but this is going onto my LinkedIn page first thing on Monday. So I'm going to announce it before you guys. I don't care.
Just wait until we let it go live, angalao. Yeah, because customers will not give us pressure.
That's fine.
They'll be like, when are you going to go live? But truly...
I love that thinking. So you see that future as a future of coexistence and what's the word I'm trying to find? A hybrid model.
Because the customer needs, they're giving us a lot of pressure to make things quick and easy and fast for them. They don't want to go through a lot of paperwork. But you find also the banks that have been there have done banking for hundreds of years.
Correct.
And there's something fundamentally right there doing. There's a safety they
So no need to reinvent that wheel.
There's no need. You can only say, can we work with you to make the whole ecosystem better? So if people need agility, they can come to us. They're doing microspace, like that part where the bank is saying this is going to be risky for us to touch. We'll be there. We'll be doing it.
Wow.
But on the other hand, when we need, so us as a corporate, we come and we give you this huge sum, you'll take it and give us the service we need. We will all be fine. Yeah.
Rose, thank you so much. This has been so exciting
Asante.
that I actually don't even want to stop. But we have to stop.
My story has ended.
We have to stop. I'm hoping that in the next couple of years, we'll be sitting here again, inshallah. But for today, I'm happy to release you to go and do Nyama Choma. But before we close, I just want to give you an opportunity to just say in a few words where your nyama choma place is, because next week or the week after, I'm going to find time, drive with my family.
This is the most exciting part.
And enjoy the nyama choma. Please go for it.
So the restaurant is called Rose Muturi's. It's along Ngong Suswa Road. Roastman, like kuchoma roasting.
Rose Muturi.
Yeah, Rose Muturi's.
Interesting.
Ngong Suswa Road. So the area is called Kimuka. So technically, after Ngong town, it's like 17 kilometers, but it's all on tarmac. If you go on Google Maps and you type Roastman Muturi's, it will bring you right to our doorstep.
Wow.
So there's lots to do. There's lots of great food, a place for kids to play. Yeah.
Love it. So are you putting up some bandas for sleeping at some point?
Oh, yeah, we do. We actually even have accommodation as we speak.
Oh, you do?
We have
Nice.
bandas for people to have like team meetings.
Yes.
There's a lot. So, yeah. So let me go. I'll convert those customers today to be my bankers.
Absolutely.
My customers, rather.
Rose, thank you so much. This has been super, super exciting. Asante sana.
Sitapotea tena sana.
Good. No.
Thanks.
Now you seem to be solid.
Indeed.
Asante
Sawa.
sana. All right,
Thank you
cheers.
so much, Ali.
All right.